everyone, my name is Marilena and I will be your hostess for today. Together with me I have Peter, our senior market analyst at IronFX. Hello Peter. Thank you for joining us today as we're looking at the fundamentals driving the markets currently. So Peter, I understand that we had a market sentiment reversal yesterday.
Actually we did. There was a market sentiment reversal in the sense that the US dollar got some support. We may add that more or less the market expectations about the Fed continuing on its aggressive rate hiking path got a boost, and that in turn tended to boost also the US dollar. At the same time, we had a number of financial releases which tended to support the USD. For example, we had the ISM non-manufacturing PMI figure, which dropped, yet did not drop as much as the market expected. We had the international trade deficit of the US, which narrowed, which was also positive, implying that the US economy suffered less from its international trading transactions. And more or less, I would note that we had also the ADP national employment figure, which rose slightly more than what the market expected. So overall, we see that there was some confidence building up, and that tended to lead exactly to the expectations that the Fed will continue to aggressively hike rates. Mm-hmm. It's not by chance that San Francisco Fed President Daly yesterday also stated that the bank's main goal remains to reduce inflationary pressures within the US economy. And more or less also implied that the Fed will not be rolling over anytime soon. So most probably it will be continuing its rate hike path. At the same time, we have to note that stock markets even temporarily halted their ascent, their two-day rally. And the bulls took a breather. We saw that US stock markets ended the day at around the same levels as the day began.
Mm-hmm. Across the pond, did the UK Prime Minister Truss make some comments?
Yes, UK Prime Minister Truss made some comments at the Conservative Party conference that was in Birmingham yesterday. Practically, the Prime Minister doubled down on the idea of cutting taxes. And that was despite a U-turn which was performed on Monday on the idea of cutting the highest income tax rate from 45%. So that will be most probably kept. But overall, the idea that the Conservative Party should continue cutting taxes more or less tended to imply that the UK government will continue on that path. And that raised once again the questions on how the UK government plans to fund its massive debt. Mm-hmm. So there is a very, very big question about the UK economic outlook. And for the time being, and as long as the UK economic outlook remains negative, given also the uncertainty surrounding it, we may see the pound weakening once again.
Mm-hmm. And how about the euro?
The euro is in a different but still similar situation in the sense that also the economic outlook of the euro area is tilted to the negative, but for different reasons. Mm-hmm. Definitely, the problems with the supply of natural gas continue, given the war in Russia and Ukraine, given also the sabotage which was performed on Nord Stream 1. And at the same time, I would be highlighting that Ursula von der Leyen, the president of the European Commission, practically stated or suggested that a cap should be set also for natural gas prices of Russia, which more or less could have an effect also on Eurozone's economy to the adverse side. Once again, we see that as long as the economic outlook for the Eurozone remains tilted towards the negatives, most probably the euro will weaken once again.
Mm-hmm. And how is the JPY behaving?
JPY, in contrast to other currencies which experienced a high volatility against the US dollar, remained stable over the past few days, or at least relatively stable against the USD. And now we have conflicting fundamentals here. On the one hand, we have a Japanese government which more or less warned that there will be more market interventions to support JPY. On the other hand, though, the root of the problem, the root of the weakness of JPY, remains in the ultra-loose monetary policy which is being kept by BOJ, Bank of Japan. And there are no signs that the bank will start tightening its monetary policy anytime soon. So practically, we would expect at some point the ultra-loose monetary policy of BOJ to tilt towards a weakness of JPY. Yet at the same time, we may see Japanese government actually intervening once again in the market.
Mm-hmm. And what's on the calendar for the day?
Well, we already had from Germany the industrial orders growth rate, which was in the negatives. It was at minus 2.4% month on month, and that was widely more, or if you prefer, more negative than what the market expected. We also had the construction PMI figures of the Eurozone and the UK. Right about now, we should be getting Eurozone's retail sales growth rate. And I would be highlighting in the American session definitely the US weekly initial jobless claims figure. It's expected to rise further to reach 203K. It's in relation to the last week of September. And a further rise of the initial jobless claims figure could imply practically that the slack in the US employment market has risen, and that may have an adverse effect also on the NFP figure tomorrow. So other than that, I would be highlighting that we have a number of Fed policymakers which are scheduled to speak. I would be highlighting, though, BOC Governor from Canada, BOC Governor McClellan, which could make some statements, and if he sounds hawkish enough, may provide some support for the CAD.
Mm-hmm. Any final comments?
Well, we had yesterday the release of OPEC's oil production level decision, where the oil producing bloc practically decided to cut production by 2 million barrels per day. Now, the production drop as such may be in reality weaker, as a number of sites mentioned that production levels had not been met already. So we may be talking about a reduction of around 1 million barrels per day, according to estimates. That should nevertheless provide some support, a boost to oil prices, and if actually so, may create wider inflationary pressures within the economies of the countries, and more or less could turn central banks even more hawkish. Mm-hmm. So it's an issue which we keep an eye out, because oil prices have not only an effect on the oil market as such, but a wider economic effect which could more or less tilt economies towards recessions or not.
Mm-hmm. Great. Thank you, Peter, for your time, and everyone for watching. Join us after a short break for technical analysis with Peter Yosef.
Welcome to another technical analysis part of the presentation for today. Now in front of your screens you have the US dollar index. It's the 4-hour chart. All charts to be presented are to be in the same time frame unless otherwise stated. You can see the trading instrument as it's being named up on the right side of your screens. By the way, we could emphasize it a little bit more, so it's more visible. Now we have the US dollar index, which has risen and corrected lower, yet a stabilization seems to be taking place. And it's interesting how the pair broke the 110.90 to the downside, yet recovered quite quickly. So I would be keeping that level. Yet I would be switching its role from a resistance line to support line. Let's color this into green. And let's go hunting for a new resistance line, which I would be placing here. Note this peak here. And let's zoom it in, have a better view, including the shadow of the candlestick. So practically that would be placed now at 100 in red, 113.70. The next level being here would be around 114.70. Okay, let's correct also the labels. Second support line being placed at 110. First support line being placed at 110.90. First resistance line now being placed at 111.65. Second resistance line being placed at 112.50. And final resistance line being placed at 113.70. That should sum it up. Let's lock this in. So for the time being, we tend to maintain a bias for sideways movement of the US dollar index between the 110.90, could be a little bit lower, could be placed at 110.80. Let's have a look. Yep. Let's correct the label as well. So probably we're going to be seeing a sideways movement between the 110.80 and the 111.65. Now these elements or these cores has practically been supported by the idea that A, the dollar has broken the downward motion it had since, let's have a look, the 29th of September. Some even argue the 28th, fair enough. And on the other hand, it has supported, or if you prefer, has respected the 111.65 resistance line, as it did also the 110.80 support line. So most probably we may be seeing the price action being contained by the pre-mentioned levels. On the other hand, we must not forget the influence of the fundamentals on the index's direction. Don't forget that we have the release of the US employment report for September tomorrow. And we may see the NFP figure and the unemployment rate substantially altering the dollar's direction. Now, should the release as such excite traders, we may see the price action of the US dollar index rising, breaking above the 111.65. That would be a prerequisite for a bullish scenario, as we would require a higher peak than the last one, and start aiming for 112.50. That would practically also create a series of consecutive higher truths, which could create an upward trend line. Mind you though that investors most probably will not be waiting for the release as such. They may start placing their orders beforehand, and depending on the expectations are going to be on the sell or the buy side. Should that be on the sell side, we may see the price action reversing direction, breaking the 110.80 and create a lower low, definitely a lower than this one, by aiming the 110 support level. That would create us a new downward trend line running almost in parallel with the previous one. For the time being, note the RSI indicator is near the reading of 50, also implying a rather indecisive market. The price action is near the mid-level of the Bollinger Band, so that's also implying the possibility of stabilization, yet there is still a downward slope. More price action in the sideways movement should be required to level this up. And that would be implied practically by the price action in the next 24 hours. Once again, though, don't forget the release of the US employment report for Friday, which could alter the US dollar's direction to either way. Let's have a look now at Euro USD. Euro USD, which also tends to show some signs of stabilization, revolving the price action around the 0.99 support line, now turned to resistance. Let's correct this. Place it as another resistance line. Given that the price action is below it, we may have to correct also a little bit higher and readjust the support lines. Given that the price action has changed, and I would be placing a new resistance line here due to the peak it had made yesterday. Let's go hunting for a new support line, which could be placed. Okay, there's a peak here. Know that, and the lower one would be here. In green, that would be the 0.9635. Let's correct the labels so everything becomes more visible. Definitely the placing of resistance and support lines, especially support lines which are under the parallel level, has gotten some more confidence, given that we have some price action, recent price action, which we didn't have in the past, below the parallel level. And that makes us feel definitely more confident in placing support and resistance levels, especially support levels. Now let's make a start with the S3, which is being placed now at 0.9635. My mistake. The second support line now is being placed at 0.9735. Interesting how the distance of 100 pips between the S2 and the S3 is being maintained. Tricks being played by the price action. And the same applies also with the S1, which is now being placed at 0.9835. So we have practically support levels which are being at the distance of 100 pips each. And each of them is being supported by a throw, so they seem to be pretty valid. It's a recent price action. It was very intense, the movement and the reversal at each point, so most probably they are valid. On the other hand, we have a resistance line which is now being placed at, let's have a look, that would be 0.9925. That's a 90 pips distance. It's still pretty close. Locking this in as well. Parallel level remains as the second support line. And the final resistance line is now being placed at 1.11. Short by this level here, which would be an ultimate market. It's interesting how the resistance level here is being supported practically by this price action here and this peak here. Anyway, for the time being, we tend to maintain our bias for a sideways movement, probably between the 0.9925 and the 0.9835 support line. Note how the price action has risen slightly above, the RSI indicator has risen slightly above the reading of 50, yet remains pretty close. So we tend to maintain the view that the market may be presenting some slight bullish tendencies, but for the time being remains rather indecisive about the future leg of Euro USD. Should the bulls take over, we would require a clear breaking of the 0.9925, so practically that the previous peak is going to be broken. Yet, in my opinion, that may also require a breaking of the parallel level above it, which was a prior peak as well. That would make me feel more comfortable about the bullish outlook. Nevertheless, the breaking of the R1 may be signaling a change of trend from a sideways to a bullish one. So be on your toes about that. Now, in case we see a bearish sentiment overtaking the market, say for example if the US dollar strengthens or the euro weakens, we may see the price action of Euro USD dropping, breaking the low boundary of the current sideways movement, that will be the 0.9835 support line, and start actively aiming for 0.9735, which provided support here. That would also allow us to draw a downward trend line, which would be showing us the limitations of the bearish price action. Once again, bias for sideways movement being maintained here. Maybe some slight bullish tendencies could be present, and that would be evident by the RSI indicator, which is just slightly, it's currently at 55, above the RSI indicator. At the same time, we would be noting that we have one throw, a second throw, which is higher. Once again, there may be some bullish tendencies here. But for the time being, and as long as the price action respects the R1, the 0.9925 and the 0.9835, which is the support line, we tend to maintain our bias for sideways movement. Let's have a look at cable. And here we have cables for our chart. Let's open this up a little bit. It is. Now cable has been in a sideways movement. It has broken since yesterday the upward motion or the upward trend line, which had guided it since the 28th of September. So we tend to maintain our bias for a sideways movement between the 1.1425 and the 1.1210. Similarly to the euro, but to a less extent, The RSI indicator is pretty near to the reading of 50. It's actually at 53, even lower. But overall, that tends to imply, once again, a rather indecisive market, which may more or less contain the price action of cable between the 1.1425, which provided resistance here, and the 1.1210, which provided resistance here, supported here, supported here. So it seems to be pretty valid. Should the bulls take over, say for example, if the UK government for any fundamental reason gets some support, we may see the price action rising, breaking the 1.1425 resistance line, which would be a prerequisite practically for the pair exiting its current sideways motion. And I would be placing the first possible stop at the 1.1590, which provided resistance here, here, and here. Higher than that would be the 1.1735, and even higher would be the 1.19. It's evident how the 1.1730 provided resistance here, practically reversing the upward motion of the pair around the, let's have a look, needle thread, the 13th of September. And the R3 was validated practically once again on the 26th of August. Wide volatility for the pair. Note how the candlesticks, the 4-hour candlesticks, practically became wider in comparison to the price action prior to the 22nd of September. And that's indicative of how deep cable actually dropped, reaching almost 1.03 against the USD. So it's pretty low. At some point, we were discussing also the possibility of the pair reaching parity level, and corrected higher over the past 6 days, stabilizing yesterday. Now, in case we see a bearish reaction, we may see once again the pair breaking the 1.1210 and start aiming for the 1.1025, providing support here. For the time being, we maintain a bias for a sideways movement. Let's have a look now at USD/JPY. USD/JPY is practically steady between the 145 resistance line and the 143.50. Note how small the candlesticks are, and we have a low volatility, indicated also by the narrowing of the Bollinger Bands here. So we have practically a sideways motion, which is also being supported by the RSI indicator, which remains near the reading of 50. We tend to maintain our bias for a sideways motion of the pair for the time being, and as long as it respects the 145 resistance line, which was tested extensively once, twice, here, 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 and the 143.50, which was tested to the downside here and here, as well as to the upside here, and then to the downside once again here. Now, should the bulls take over, we may see the price action rising, breaking above the 145 resistance line, and start aiming for the 147.50 as the pair's next possible target. To the downside, should the bears take over, we may see the price action dropping, breaking the 143.50 and aiming for the 141.50. Note how the level was tested here and here, was broken, but it was a swift break which was practically created by the intervention of the Japanese government in defense of the JPY. Nevertheless, that didn't last long. The market push the pair just up once again. Give me a sec. Now let's move out to the second safe haven currency pair, that would be USD-CHF. USD-CHF, which is in a similar sideways motion, actually narrowed it a little bit. Let's widen this a little bit as well. For the time being, it was interesting how USD-CHF actually tested the 0.9860, yet quickly reversed direction and got below it once again. So for the time being, we tend to maintain our bias for a sideways movement between the 0.9860 and the 0.9765. Mind you that the RSI indicator is just below the reading of 50. It's actually at 46 right now. So that tends to imply also a sideways motion of the pair. Nevertheless, note also how the pair quickly changes direction. So should we see the bulls regaining control over the pair, we may see it breaking above 0.9860, which was tested here and here especially, these two times as well, and aim for 0.9960, extensive tests with a double top here. It was a beautiful double top formation. Note how it was on the rise, peaked, corrected, once again another swing to the upside, at the same level, corrected, and dropped all the way down to the levels it was before. It was a clear-cut textbook example of a double top formation. Okay, let's have a look of how the market could push USD-CHF lower, in which case we may see the pair breaking below the 0.9765, which was tested here and here, respected here, tested against here. And practically in this case, we would be placing the 0.9690 as the next possible target for the bears. Now, 0.9690 is a story of its own. It was tested to the upside here, 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 and here, and used to be a resistance line. But given that the price action is clearly above it, it has switched its role and become a support line. Let's have a look at commodity currency AUD-USD. AUD-USD also in sideways motion. And this time we're placing it between the 0.6530 and the 0.64. Note how the support line was tested here, aimed for here, briefly breached here, but recovered quickly, while the resistance line, the 0.6530, provided resistance once, twice, 3, 4 times, and was tested here yesterday, actually today, in the Asian session. Once again, the RSI indicator remains near the reading of 50. It's actually at 48.9, that would be 49 almost. So we tend to maintain our bias for sideways motion of AUD-USD. Let's widen this a little bit. At 48. Becomes more visible. Now, should the bulls take over, we may see the price action breaking the 0.6530 clearly, and that would be definitely a prerequisite, as we would require a higher peak, and start aiming for 0.6670, which provided resistance here and some support here and here. Higher than that, we also note the 0.6760, providing resistance here and here. I know it's pretty narrow, but for the time being, we're not actually interested in uniformity here. We're actually interested to see that there are peaks upon which the levels are resting. To the downside, we would require, for bearish outlook of the pair, the price action to break the S1, which, as we have mentioned, was slightly broken here and tested here, and aim for 0.6270. Now, at this point, I would like to see how far back that actually goes. Let's drill to the daily chart. Okay. So we have extensive testing over a 3-day period, and here as well, of AUD USD's first support line, and that was around May, while the second support line is being, sorry, that would be May 2021, sorry, and the second support line was tested in April 2021. That was last year plus. Okay, drilling back down to the forward chart, so they seem to be pretty valid in keeping them. So should the bears take over, I would expect the price action A to break the 0.64 support line and start aiming for 0.6270, while the 0.6110 would be, in our opinion, an extreme bearish target. But nevertheless, it's quite plausible. Mind you though that the pair would have to descend over 360 pips, which is pretty steep for AUD USD, even for AUD USD. So it's a rather extreme level. Let's have a look at USD Cad, the second commodity currency pair, which has broken just above. It's actually testing in our opinion, but we have to correct it as the price action has moved above it. The 1.3650 now turned to support line. And let's go hunting for a new resistance line. Switching to the daily chart. Okay. Could go a little bit higher. This peak here. Yep, I'm keeping this one. And that would be, sorry, the 1.4170 resistance line resting on this peak here. The next one would be here or here. Even higher the next one, and the highest one here. Okay. Let's readjust the levels. Drilling back down to the forward chart. Let's readjust the labels as well. $34.90 being the second support line, 1.3650 being the price actions level right now. $1.3820 being the first resistance line. Second resistance line being placed at 1.40. And 1.4170 being the ultimate resistance level. Lock this in. And here we have it. But now we have turned practically the 1.3650 from a resistance line to support line. Why? Because the price action is just above it. In our opinion, though, that does not signal that the trend has changed. For the time being, it seems that we are still in a sideways movement between the S1 and the S2. So I would require a clear breaking, a movement above the S1, and definitely a movement above this level for bullish outlook, as it would be signaling a higher peak than this one. So should the pair maintain its sideways motion, I would expect it to remain between the 1.3650 and the 1.3490, somewhere here. Why? Because you can see that it's still finding difficulty to clearly break the S1. On the other hand, though, it respected well the S2. But given that there is an upward motion of the RSI indicator, which is currently, by the way, around the reading of 50, and should the bulls maintain control, we may see the price action rising and testing the 1.3820. On the downside, should the bears take over, I would expect the price action definitely to once again dive below the 1.3650 support line, and I would require for bearish outlook a clear breaking of the 1.3490 support level, possibly aiming for the 1.3350. For the time being, I'm still not convinced about the bullish intentions of the pair. I would expect the pair's price action to correct a little bit lower and remain between the 1.3650 and the 1.3490. Once again, though, bullish tendencies should not be underestimated, which could drive the pair higher towards the 1.3820. Let's have a look now at NZD-USD. NZD-USD, which had a bullish momentum, see it here, yet corrected lower during today's European session. It's quite evident. And as it has dropped below the 0.5750, I'm keeping the level despite the break, as it had served the pair well here. In which case we may see NZD-USD remaining at practically between the 0.5750 and the 0.5570. For a bullish outlook, which could be supported in the sense that we may be seeing practically the building of an upward trend line. But such a trend line would have to be rather sharp, and the price action would have to respect it by rising quite quickly, breaking the 0.5750. Definitely would require a higher peak than this one. So we may see the price action testing the R2 0.5890. On the other hand, Should the bears take over, we would require a clear breaking of the pre-mentioned upward trend line, a breaking of the 0.5570, which is the low boundary providing support here of the current sideways motion, and start aiming for 0.5450. Such a movement could also provide us with the necessary lower troughs and lower peaks to form a downward trend line. Okay, let's have a look at gold's price. Gold's price, which remains in a sideways motion between the 1730 and the 1706, at some point tested the S1 level but held its ground. On the other hand, we have an upward trend line which is practically providing the idea that the bulls may be taking over once again. It will be clear in the next 24 hours as the price action will have to either break the upward trend line or respect it. Should it be respected, we may see the price action rising, breaking the 1730 and start aiming for 1765. Scenario which is totally plausible given the price actions, gold's upward price actions movement. Look how beautifully steep the upward motion was here and here. It's going to be interesting to drill out to the daily chart, where you can see the steep rises once, stable, rise, slight drop, correction lower, but it has not affected the upward trend line, and which is more evident in the 1 hour chart. Yeah. Now drilling back out to the 4 hour chart, gold's price. We tend to maintain a bullish outlook as long as the price action remains above the upward trend line. And on the other hand, we may see the stabilization of the precious metal being continued given that the RSI indicator bounced on the reading of 70 and dropped lower. Should the stabilization be maintained of the precious metals price, we may see it breaking the upward trend line and remaining between the 1730 resistance line and the 1706 support line. In case of a bearish outlook, we would require the price action to break the pre-mentioned upward trend line, definitely break the 1706 support line, and the price action to start aiming, if not even reaching, the 1680 support level. Seems good. Let's have a look at stock markets, making a start with Dow Jones. Okay, that's nice. Now we saw that US stock markets were on the rise, tested the 30,340. Actually, yesterday, or if you prefer during today's Asian session, the futures broke above it slightly and corrected lower during today's European session. So we may see here stabilization as well, given that the RSI indicator is dropping, aiming for the reading of 50. It's currently at 57 and dropping, which may imply that price action may drop further, aiming for 29,670. Should the market sentiment remain uncertain about the direction of stock markets, we would expect the price action of Dow Jones to remain between the 30,340 and the 29,670. Should the market's worries about the Fed's intentions ease somewhat, we may see the index rising once again, breaking clearly this time the 30,340 and start aiming for 31,180. On the other hand, should the market's worries about the Fed's hawkish intentions intensify further, say for example due to a very strong NFP figure and a very strong US employment report, we may see the price action dropping, breaking the 29,670. That would be a prerequisite for a downward movement in our opinion, and start actively aiming for the 28,915. Okay, let's have a look now at Nasdaq. Which is in a very similar position. A very, very similar position. You can see that the levels may not be exactly the same. The intensity of the movement may not be the same, but you have, say for example, in Dow Jones, one peak, second peak, one trough, dropping. We have the similar thing here. One peak, second peak, one trough, the index dropping. So we tend to maintain also bias for a sideways movement currently of Nasdaq between this time the 11,615 resistance line and 11,330 resistance support level, i.e. implying a movement somewhere here. Should the bulls take over, we may see the price action rising, breaking the 11,615 and aiming for 12,020. While should the bears take over, we would require clear breaking of the 11,330, which will reverse the downward motion of the index. That would be on the, let's have a quick look, on the 5th, yesterday, of the 5th of October, and aiming for 10,880. Let's also have a look now at WTI. WTI's price, which has risen, it's understandable after the boost it got from the announcement of OPEC that it's going to be curtailing production by 2 million barrels per day. So we have to switch the 86.35 support line, the resistance line to support line, with the next possible stop to the upside being on this peak here. That would be the 96.50. Let's have a look. Sorry, 95.50. Correct it once again. Lock this in. Correct the labels as usual. It's clear that for the time being we are having a bullish outlook for the commodities price as long as it remains above the upward trend line, guiding it. And the correction lower today seems to be threatening that. However, would require a wider correction lower before switching anything, and definitely a break below the pre-mentioned upward trend line, possibly also a break of the 82.45 and the index to aim, the commodities price to aim for the 82.45 support line. Let's have a look at it. 79. 82.45, 86.35, 90 being the first resistance line, or the next one if you prefer. Second resistance line being placed at 92.30. And final resistance line being placed at 95.30. Lock this in. Let's see what will be happening on whether practically the price action will be moving towards the 90 resistance level by respecting the upward motion, or whether it's going to be stabilizing, creating a new peak, and practically remaining above the 86.35 support line, but breaking the pre-mentioned upward trend line, or whether the bearish scenario would be taking off and practically pushing the commodities price lower, breaking the pre-mentioned downward trend line, breaking the 86.35 support line, and aiming for the 82.45 support level. On the other hand, note how the RSI indicator has surpassed the reading of 70, implying that practically the commodity is or may have reached overbought levels, something that the markets are adjusting to given that the RSI indicator is slightly dropping. So a correction lower should be or could be in the cards. On the other hand, we can see that the correction low of the price action has already created some distance with the upper Bollinger Band, so there is some room available for the bulls to play here. That should sum it up for the day. So from all of us here at IronFX, best wishes for solid trading.
Today I will talk about Bollinger Bands. Bollinger Bands are a technical analysis tool developed by famous technical trader John Bollinger in the 1980s. They can be used by traders to identify extreme short-term prices in an asset. There are three lines that make up Bollinger Bands: a simple moving average and an upper and lower band. The upper and lower bands are created by adding and subtracting one standard deviation from the moving average. Standard deviation is a common measure of volatility. Usually traders will nearly always find the price of an asset to trade within the bands. The bands will expand and contract as the price action of the asset becomes volatile. One of the main concepts you need to understand when using Bollinger Bands is that periods of low volatility generally tend to be followed by periods of high volatility and vice versa. For instance, if you notice that the Bollinger Bands start to move towards each other, there is a chance that volatility will increase and there will soon be a trading opportunity. Another method of using Bollinger Bands is to note when the price of an asset moves above the upper band or below the lower band. When prices move above the upper band, prices are considered to be overbought. On the other hand, when prices move below the lower band, prices are considered to be oversold and trigger a buy signal. It's important for traders to monitor movements in volatility, and Bollinger Bands are a great tool to help traders to this. Identifying prices that move beyond the bands can help traders take advantage of high or low prices. Thank you for watching.
I'll give it a minute or two before I get started. If you have any questions, if you are here, let me know, say hi. All right. Super. How are you doing? Hey guys. Welcome again. Let's go get started in a couple of minutes. All right, fantastic. Let me know, if you're here, let me know how you've been trading, where you're joining me from. If you have any questions, please let me know. All right, I'll give it a minute more and we shall start. Thank you all for joining at this time. Shall get started shortly. Okay, so let's get started. Today we are here with IronFX on the webinar series. I will be guiding you on some live trading analysis, giving you my trade ideas, my views and opinions of the markets. So if you have any questions, please feel free to let me know. Put it into the chat, let me know. I'll be happy to guide you through your questions. So if you have any, methods, strategies that you are currently deploying and trading, or if you have any questions, let me know. I'm happy to give you my 1-2 cents worth of opinion to maybe help you trade better, hopefully help you trade better and more profitably. With that said, as we get started, a quick disclaimer is that any information in this webinar should not be considered as investment advice or an investment recommendation, but instead as educational material only. This material has the personal opinion of the author, and the client's investment objectives and risk tolerance have not been considered. IronFX is not responsible for any loss arising from any information contained herein. All right. So what it means in general is that I will be, as I said, sharing with you my thoughts, ideas, views of the markets. So if you do jump into any trades, please make sure you do your own due diligence. Check your charts, check your leverage, check your trade size and margins before you jump into any trades. I can't be responsible for any profits or losses that you might make. All right. So with that said, let's jump straight into it. Oops. First thing I do, right, I think I recognize a lot of names here. I see familiar names here, is that you all know the first things I do is I look into the news, right? I look into the news. I see where are prices likely to be heading based on the news, all right? Previous news and upcoming news. And then I look into the charts to help me identify levels. So if, for example, I anticipate that the euro dollar should be trading lower, right? I'll look into the chart based on the economics. I think the euro dollar should be trading lower. I'll look into the charts, and if it's showing me some downside potential, then I'll get in. If it's showing me an upward move, I'll wait for it to hit a level, possibly reject the level before I start selling it down again. All right. So at this point, if you have no questions, what I'll do is I'll share with you what happened so far this week. Okay, you can see on Monday, we had the Swiss franc CPI data was 0.3%, expected a 0.1%. It came out at a minus 0.2%. So like minus 0.2% in terms of CPI, what it means is that the Swiss are actually seeing a month-to-month basis a bit of a slowdown in terms of the inflation growth, right? A bit of a slowdown in terms of inflation growth. Then I'll look into the charts just to show you here. US Swiss franc, clear out some lines. Okay. And then on the 5th, was it the 5th? On the 3rd of October, at that news release, right about there. Okay, at 2:30 p.m. Okay, so we actually saw it here as that news got released, because we saw, they're looking at a slowdown in inflation growth, which could mean that the Swiss National Bank, the SNB, is likely to slow down on further rate increases, right? So if they slow down on further rate increases, That's going to mean, yep, you got it. It's going to mean some weakness in the Swiss franc, right? Because if they increase rates, we're going to see the strength. What we actually saw was, the increased likelihood for a slowdown in rate increase. So we see the Swiss franc weaken, and also we saw the dollar strengthen a bit. So we saw this push towards the upside, right? We saw this push towards the upside. It came up, tested that resistance level of about 0.9950, right? So it came up, test these two levels, it hit that level, and then it rejected back down again. What I like about the US Swiss franc, this is on H4 time frame, is that we've got a good base here at that 0.9750 level, right? 9750 level. It's hit, it's bounced off, it's hit, it bounced off. It came close, 9780, and then now it's pushing towards the upside. What I'll be looking for in this case is if the US Swiss franc can break above that near-term level of 0.9850, right? If it can break above 0.9850, we might actually see it turn up to test that 9950 level. So in terms of a potential trade, you could be looking at above 9864, 9865, relatively tight stop loss, about 30 pips, take profit about 80 pips, a 1:2 risk-reward ratio towards the upside if it breaks above and closes strongly above that 9850 level. All right. That push towards the upside is going to be highly dependent on the dollar index, because now we know not a lot of big news to be had for the US or for the Swiss franc. So any move on the US Swiss franc is likely to be highly dependent on the volatility of the dollar index. So that was the news there on Monday. The US ISM manufacturing data did not have too big an impact. What we followed on with that is on Tuesday in the morning, 11:30 a.m. GMT +8, we saw the Aussie cash rate, the RBA, Reserve Bank of Australia, increase rates was 2.35, expected a 50 basis points increase, but they didn't do 50, right? They did only 25 basis points, taking interest rates for the Australia to 2.6%. What you want to note here as well is in the lead up to the news, we actually saw that headline, RBA set for one last outsized hike before low slows tightening. Right? This was before the news. Anticipation was a big rate hike, a 50 basis point hike, before a slowdown towards 25 basis points. Another headline on that news release, before the news release, was Aussie dollar rate vulnerable to dovish RBA rate hike, right? A dovish rate hike. That means they're likely to increase rates, but we're going to see the Aussie dollar drop. And then right before the news release, we saw a headline, recession fears grow ahead of Aussie rate call. So what you see here is bad news after bad news after bad news leading up to the interest rates decision for the RBA. What we saw in the charts actually was, oops, I'll take that away. We actually saw on the charts here, I'll show it to you on the H1 time frame, on the 4th of October. Okay. On the 4th of October at 11 o'clock, when news was released, I'll move it one before. When the news was released, it actually went towards the downside. All right, this was because of the bad news, the less than expected rate hike. We actually saw the Aussie dollar weaken towards the downside. I'll tell you that I actually did get into this trade before the news. I actually got in right about just below that 6.5 level, right? Why I was a bit confident to get into that trade below before the news was, I saw that reaction there, right? It tested. So it tested that level of 6530. It came close. At that point, it tested that level. It came close again in the lead up to the news. As the news was released, we see it push towards the downside, right? We saw it push significantly towards the downside. In terms of my trade, what I actually did was I sold below 6.5. I had my stop loss up there at about 40 pips. Okay, and then my take profit was back down here at about 80 pips. Right, so about 80, right about there. Okay, why so? It's because I saw that as a key support level. Right, key support level at 6.4, at about 6.4. So I had a round number there. Okay, and then so I had my take profit just before that support level. I can tell you that I actually got in before the news, fell all the way down, hit that level. I came towards that point, and as came to that point, I got out of my trade within the hour. Actually, I got out within the minute of the news release, right? So I'll show it to you here on a 1 minute time frame. Again, if you're not super familiar with trading, then I wouldn't go into the 1 minute time frame. I just want to show you the bit of an illustration or the chart view of what happened. Okay, let me just find it. Bear with me. On the 5th at, I know it's getting a bit messy, but okay, there we go. Move that back. On the 5th at this time. Okay, on the 5th at 11 o'clock. Okay, this was the news here. Right, so at the 5th at 8:11, there, that news there, we saw that drop towards the downside. Okay, I think it was here. 11:30, we saw the drop towards the downside. Oh no, it's not the 5th, it's the 4th. Sorry. There we go. That makes more sense now. Within the minute. Okay, so you can see here, this is a 1 minute chart. Within the minute, it actually fell significantly all the way down. So within the minute, I had my trade running, fell all the way down. I got off the trade at about 6.4, just about 6.455 or 5.6, I think. So within a minute, got in and got out of the trade, and then I saw that bounce back up. Very fortunate is that because I got out of the trade, I was happy. You can see that the subsequent couple of hours, it shot back up, tried to break above the resistance. It failed, came back down again. Take that away. Right, and then it continued trading within this range for the day, tested again last night, and traded lower. What I actually just did before this session was I had a trade. I saw a rejection of this resistance. You can see that level, right? Consolidation with a rejection, similar to what happened here. So that was a consideration. I was thinking at that point, looks like it might go towards the downside. I want to sell. What happened? I waited 1 more hour. I waited for that downward move. And at that point, I thought, okay, great, I'll sell there on the close of that hour. Stop loss, again, about 40 pips above that resistance level. Take profit level, I had it at 80, right? I had about 80 pips just because of that wick towards the downside. And just before this session, right? So just before this session, it dropped 1 hour, 2 hours. I closed out at about that point there. So I was looking at that level there, and I closed out for about 30 pip move towards the downside. Okay, so that was my current the trade I just did on the Aussie dollar towards the downside. Right now, I'm expecting the Aussie dollar to, as it trades lower, likely to test and bounce off this level, come back up, and trade within this range. right? So likely to stay between 6530 and 6450. If it does break lower, then it's just an extension, but it's likely to trade within this range. Movements of the Aussie dollar at this point is highly dependent on the dollar index. All right, not a lot of news to be had for the Aussie dollar now, so these movements are all going to be highly dependent on the dollar index. With that said, that was the RBA interest rate decision. Again, US jobs openings didn't move markets too much. And then we had the New Zealand official cash rates on Wednesday morning on the 5th of October. It was 3%, expected 3.5, was released again at 3.5%. In this case, what we actually saw was that the Kiwi dollar, take that away. The Kiwi dollar on the 5th of October at about 9 a.m. there. Okay, so I'll move it just one before so we can see the candle. You can see that the Kiwi dollar on the release of the news actually shot towards the upside. It went up by a good 70, almost 80 pips towards the upside as the news was released, right? That move higher, big move higher, is driven not because the RBNZ increased rates by 50 basis points, right? It was already expected that they did that. But if you look into the statement, what you see is that the committee was actually considering 50 and a 75 basis point rate hike at this meeting. So they did 50, but knowing that they were considering a possibility of a 75 basis points rate hike actually gave a lot of hawkish sentiment to the Kiwi dollar, right? Made it very hawkish. So what they actually saw was, because of that, a big push towards the upside there on the Kiwi dollar, towards the upside. Okay, but as it tests that 0.58 round number resistance, and if I went to the H4 time frame, you can see that it's a nice swing low there. So it came up, tested level, rejected, and pushed down again. Overnight, it did come back up, test that level, and reject towards the downside again. What I was actually looking at, or was comparing, is between the Kiwi dollar and the Aussie dollar. When I saw the Aussie dollar, I was actually deciding between the Kiwi and the Aussie. I ended up with the Aussie, but same thing. Consolidation, rejection, pin bar rejection of that 0.58 at that point, right? You could be looking at, if you did the Kiwi dollar instead, you could be looking at that move as well. So a good 40 pips stop loss as well. Take profit 80 pips towards that recent low point. You can see that we're almost there as well. Okay, same move on the Aussie and also on the Kiwi dollar. Again, recent moves. This move towards the downside is driven by the dollar index. There's no news on the Aussie, no news on the Kiwi at this point. So this move lower is primarily driven by the volatility in the dollar index. With that said about the Kiwi dollar, right, about the RBNZ rate statement, interest rate decision, nothing much else. OPEC meeting, they actually released a news that they were going to cut oil production by 2 million barrels per day. So we saw some upside in oil. ADP non-farm employment change was 185, expected 200, got released at 208. Right, so we saw some good anticipation that we might see stronger employment numbers for the US. And that's important because not a lot of news today, but into tomorrow, we do have the US non-farm payrolls data to be released, right? US non-farm payrolls was 315K, expected 265, given that an ADP non-farm was slightly positive, we might actually be considering some positive number here for the US employment change data. And also from the previous few months, you see that, right? It was in September, it was 526, expected 295, came out 315. August, 398, expected 250, came out 528. Big strong number there. July, 384, expected 260, came out 372. Right, so we've seen modest forecasts, and that actual data always and has been beating the modest forecast quite significantly. What we're looking for here in this case is if the US non-farm payroll is going to be the same thing for this month, 315, 265, are we going to see a big change or big number here? Maybe a 300 or 325, maybe. All right, what do you think? Do you think it's going to be a big number or a small number? Put it into the chat, let me know. All right. And as you do that, what you notice is that unemployment rate for the US is expected to stay at 3.7%. Average hourly earnings looking to stay at a 0.3%. For tomorrow, what you should actually be considering, not so much just on the US dollar, but look at the Canadian employment numbers to be released as well. Canadian unemployment rate looking to stay at a 5.4%. Employment change looking to go from a minus 3.9 to a 19.5K, right? If that happens, I'll show you what happened before, right? It was in September minus 30.6, expected 15, came out minus 39.7. August was minus 43, expected 14, came out minus 30. July was 39, expected 20, came out minus 43. So it looks like employment change data in the Canadian side hasn't been too good, right? Over the last 3 months being released at a minus number. If we do see on Friday, tomorrow, a negative number on the Canadian employment change, that could signal further weakening in the Canadian dollar, right? Could signal further weakening in the Canadian dollar, which could mean that, and if we do see that stronger US dollar, so looking at the US Cad, I like that. Let me just clear this out a little bit. I like that it's found a good support at that 1.35 level, bounced strongly towards the upside. Test that. Oh wait, H4. Let's look at an H4 time frame. Right, it's test 1.35. It's bounced up. I like that it's tested that 1.37 last night. Right, and now it's pushing towards the upside. It's pushing up. What I'm looking for here is on the US CAD, if it can continue and break above that 1.37, could the US CAD push higher towards that 1.385, almost 1.3850 level? Okay. To be more specific, about 1.3834. So with that, what needs to happen on Friday or leading up to Friday is stronger US dollar, weaker Canadian dollar. What I'll be looking for in this case will be a buying opportunity above 1.3696, about 1.3723. Take profit about 100 pips, stop loss about 50, or 1:2 risk reward ratio towards the upside there for the US CAD. Depends on employment data on Friday. All right. Makes sense so far? Any questions so far at this point? Let's see. Okay, all good, fantastic. Okay, so with that, that concludes the news for this week. What I also tell you is that this move or this volatility from the non-farm payrolls for the US could be a bit brief, right? What I mean by a bit brief is that we could see a movements at 8:30 GMT plus 8, 9:30, 10:30, and then it might slow down and peter out, right? Why so? Well, I don't think it'll be a continuous move despite possibility of higher volatility, is that you notice on Monday, Japan's on holiday, health sports day. We've got the Canadians on a holiday, Thanksgiving, happy Thanksgiving, and the US in observance of Columbus Day, right? So it's going to be a long weekend. It's going to be a long weekend for most of the markets, especially the US. So if given that, we're likely to see traders and investors not really pile on trades because of the non-farm payrolls. What we might actually see is a bit of volatility and then a bit of a slowdown because, typical approach is not to hold on to trades through a weekend, especially through a long weekend. Okay, so that's quite important there to pay attention to. What else could happen next week is that on Wednesday, we do have the pound GDP numbers month on month. What you see here is that it was minus 0.6, expected 0.3, came out at a 0.2. So not as good as expected, but still better than previous. In August, was 0.4 expected, minus 1.2, came out at minus 0.6. So in the negative territory, but not as bad as expected. In this case, we might actually see some recovery, but it's more likely that even if we do see any recovery in the pound, the GDP might not have a big impact at this point, because look what happened to the pound dollar. Okay, I'll show it to you here. The pound dollar on the 23rd. If you haven't been trading on this news, where have you been? All right. On the 23rd of September, it broke below that 1.12 level very strongly all the way down towards that 1.03. Let's round it slightly to 1.04. Right? It broke all the way down to that point, and this move lower was because of the introduction from the PM, from the UK PM introduction of a tax cut for the UK, the biggest tax cut in 50 years. Markets grew concerned that given the UK were looking at tax cuts, would they be able to finance their debt? That's why we saw the pound dollar drop very significantly, almost 800 pips or 800 pips towards the downside. All right, that move lower, what we actually saw as a reaction or a plan to recover from that move was this point here, where the Bank of England came out and said, hey, we need to save this situation. The pound dollar, they're trying to avoid getting it to parity. What the Bank of England did was they said they will buy government bonds as much as required at whatever scale necessary to provide stability to the financial markets. And that's why we actually saw the pound dollar push towards the upside, right? Intervention from the Bank of England pushing the pound dollar towards the upside, back towards the starting point of that 1.12. That move further towards the upside from 1.12 towards almost 1.15, right? Almost towards 1.15 was when we when the UK PM reversed her decision to cut, or for that big, massive tax cut, she reversed U-turn on a decision to cut tax for the top earners in the UK, right? So one small move caused the pound dollar to gain a bit more optimism, pushing towards that 1.15 level. At this level, again, now tracking back towards 1.12 because of that strength in the dollar index, or the recent strength in the dollar index. Okay. So with that, what could happen that's why when I was telling you about the pound GDP numbers next week, unlikely to have a massive impact on price volatility, because it is being influenced by a lot of bigger news, a lot of bigger impact news, the intervention, the tax cuts, and the U-turn on the tax cuts, providing the overarching impact more so than the GDP. So with that, what else to look for on Wednesday? PPI not going to do too much. FOMC meeting minutes. It's already a done deal, right? It's just telling you what happened during the meeting. So not likely to have a big impact on price. But what you want to do is pay attention. 13th of October on Thursday, US CPI data year on year was 8.3%. Expectations or forecasts have not been released yet. But if we do see a stronger number, right? If we do see number increase, like what we saw in September was 8.5, they forecasted 8.1, but it came out 8.3 year on year. That's going to indicate that inflation in the US is still high, right? Despite interest rate increases from the FOMC, right? Which could lead to more aggressive or continual aggressive increases in terms of interest rates from the FOMC. So this is going to be a big news event that you would have to pay attention to on Thursday, 8:30 GMT plus 8, CPI data for the US year on year. All right. And then following on from that, on the 14th, on Friday next week, core retail sales data for the US. I think that the fireworks will happen here on Thursday, and then we're going to see some volatility unless this retail sales number comes and has a big surprise. But you can see that generally no real big surprises there for the retail sales, core retail sales, or the retail sales data. Okay, so a lot of news, a lot of big news, especially in the CPI data for the US for next week. For the pound dollar, what I'm looking at, I'm looking to see what's going to happen at 1.12. Is price going to come to 1.12 and bounce back up? If it does, I'll be looking for a rejection of that support level. I'll be looking to buy it up, right? Like that. I'll find that recent point there, or the breakout level there. I'll look to buy it up towards the 1.15 level. Okay. Or if we do see a breakdown from this 1.12, if it breaks lower, then I'll be looking for that selling opportunity like what happened before. But I don't think it's going to go all the way down. I think let's be reasonable. More likely, we're going to see a scenario of first target level. If it breaks down at about that first 50, maybe that 61.8 level as a take profit, still a 1:2.85 risk-reward ratio towards the downside, with a risk level at that 50% Fibonacci retracement level. We're going to see where the price is going to come down and touch that. All right. Relatively straightforward there. With that, let's look at Euro. The euro has been very interesting. Why so is because with the way the pound dollar has been moving, right? Big downward move and then the quick recovery or the strong recovery because of the intervention and the U-turn. That's also actually led to the euro recovering as well, right? What you notice is that, or what you should notice is that the dollar index is made up of a basket of currencies, right? It's influenced by a basket of currencies. So main player in the dollar index or main proportion of the dollar index is made up of the euro, and the second biggest proportion is made up of the pound. So when we see the pound recover strongly, that's going to cause the dollar index to drop a little bit. And as we see the pound recover, as the dollar index drops, we're going to see the euro dollar recover as well, right? So as the euro dollar recovers, what you notice is that it has climbed back up to that parity level. It's hit parity and it's reversed towards the downside, right? It's climbed strongly. I'll show you a bit of a channel towards the upside there, right? You can see that good upward move. Oops. A good upward move pushing to hit to hit the parity level, and then now it's turned down. It's trading below that level, below the channel, and then also at that point, right? 9890. 9890, about there. You can see that the last time it's tested those levels, draw it right across for you guys. 9890. Okay, it's tested that point, bounced. Once it broke that level, then we saw that big downward move towards that 9550 level. Okay, so right now we're at that same point. Okay, giving this a bit of a range, we would say that if it breaks below below this point of 9860, if it breaks below 9860, we're going to see quite significant, or we could see quite significant downside, similar to what happened here, right? So it broke, tested, confirmed, and went all the way down. If that does happen, then what we'll be looking for is selling opportunities below that point, about a 60, 70 pip stop loss. I wouldn't go all the way down again, similar to the pound dollar. I would say let's test it. It'll come down to about that 61.8 level at about just above that 0.97 level, round number support level. Okay, so a good one, almost 1:2 risk reward ratio towards the downside. I would say even if you did a tighter stop loss, a 1:2 towards the downside for the euro dollar. Makes sense so far, everyone? Good stuff. Thanks for that. And lucky last, let's look at the US yen. Again, I've had this picture drawn up already, and it's been useful for such a long time. It's tested, right? It tested 145, 145. As it tests at 145, Bank of Japan has been commenting. This was back in early September, all the way to mid-September. They've been commenting about rate checks, right? Whether they're going to intervene. Markets were anticipating. We saw it once it tested 145, it broke back down, tested, it broke back down. The Bank of Japan policy release, no change, no talk about intervention. So the US yen push towards the upside to test 145.90. And as it tested 145.90, the Bank of Japan kicked into action. Right? The Bank of Japan kicked into action, which saw that big downward move towards that 140.60 level. Right? This was, in this case, the intervention by the Bank of Japan, as they actually declared that they were intervening, and that brought the US yen down from 145.90 towards the 140.60 level. But what happened? Despite the intervention, we saw the dollar strength continue to push the US yen back up towards the 145 level, but failed to break higher. You can see here, failed to break higher. Again, tried to break but failed. Right now, testing again. Let's see what happens to the US yen as it approaches that 145 level. Anticipation is that we might see it climb up towards 145. If it does break, we might actually see some volatility, something similar here. Let it climb up before a big push towards the downside, or is likely to continue trading within this range. So I think that the US yen is likely to trade within this range, as it has been since the end of September to now, trading within that range, likely to continue at this point. Any questions so far at this point? All good. So I can tell you that I'm not particularly keen on the US yen staying between, no real big trading opportunities as it stays between that 143.85 and 145 level. For me, I like trading more in a trending scenario rather than, if that means an upward move or a downward move, rather than in a tight range or a horizontal move. Okay. Next one. Okay, so we talked so much about the dollar index. Let's look at the dollar index here. What you would have seen is that the dollar index reached a high of 114.76, 114.75, almost 115. I can tell you that at that point, everyone was asking how high can the dollar go. I had my level at 115, and I said, if it fails to break that point, we're going to see some retracement back down towards the 110 level, and it's just done that, right? A big move towards the downside. You can see if I did a channel towards upside, you can see first was that move as it broke higher, right? And then again, another channel towards the upside there. No, it wasn't a channel, that one. It was just a diagonal support level, right? A diagonal support level. So as it broke up and turned back down right now at that, let's do that, okay? Right now, bouncing off that 110 level at 111.35. What I'm looking for here on the dollar index is if price can break above that point, which is 111.77. I rounded to 112 even. All right, we did a Fibonacci towards the upside here. You notice that 112 aligns up with the 38.2 level. Okay, so can the US dollar get stronger? Quite likely. When so? Possibly going to continue within this range for now, right? Likely to stay within this range for now. So I'll draw it out, right? Likely to continue climbing like that. If it breaks above this point, it's likely to be because of a good NFP, right? But that's a key level there. If it fails to break above, it's likely because of a bad NFP coming back towards that 110 support level. Okay, so at this point, don't look to be rushing into trades. I think that while there might be some short-term trading opportunities, just be extra careful. We do have the non-farm payrolls to be released tomorrow. All right, any questions so far? Anyone with a request or anything you want me to look at? All right, if not, one more thing I will share with you is gold. Gold has done very well with that dollar weakness, right? So gold climbed very strongly as it, where was it? 1735, no, 1730 was that level, right? So we found gold previously at that 16.15 level, found a very strong support there, bounced off. This move higher is because of the inverse, a non-perfect but inverse relationship with the US dollar, right? So you can see that move still within that channel. What happens on gold now is that I'm looking to see where it's going to drop to. If we see that dollar strength come back in, I'm thinking that we could see it drop a little bit, but because of that channel pushing up, it could find a bit of a support level. It might drop a little bit, find the support there before pushing up again, right? Oh, wait, that wasn't a very good line. Let me do that again. You could see this push back up again. Okay. How high can gold go? The next level, as I drew that, is at about 1765. Top of the range, top of the channel range at 1765. But this is going to be highly dependent on further dollar weakness. Like we were just looking at the dollar index, looks like it's going to be a bit uncertain for further dollar weakness. So if we do see it break out of that range, out of that channel, then what you could be seeing is it needs to break below 1702 before we could see gold trade lower towards that 1658 level or that 61.8 Fibonacci level. So in this case, I'll be looking for some selling opportunities below 1700. Stop loss just above. Take profit just before that level. A 1:5 risk-reward ratio towards the downside. Okay. So again, please bear in mind, I have just been sharing with you a lot of ideas that I've had of the markets, levels that prices are reacting to, potential movements to where prices could go. Please, if you're going to jump into any trades, do your own due diligence. Don't jump into all the trades, right? Be a bit selective. Like, look, I was choosing between the Aussie dollar and the Kiwi dollar. Just choose one, right? You don't have to jump into every trade. Make sure it's a good trade, and then take it from there. All right. So with that said, any further questions? If not, what I'll do is I'll call an end to the session. And for that, please remember, we do have a non-farm payroll data to be released tomorrow. So trade well, trade safe, and take care now. Bye-bye.